Indeed, a very warm welcome to This is the Business Hour podcast. My name is Mbogoh, and today's episode is sponsored by Workstyle.africa. That is a co-working space right here in Nairobi for those people who do not want to work from home, or you want just a place that you can do your work and go home. Of course, there is a fee, and we will be giving you more details in our subsequent shows. But make sure that you check them out on all their social media platforms. That being said, today we're going to have a conversation with our regular guest. He's not a new face right here on BH. His name is Sammy Aloyo, director at ACMA Global and also a tax expert. And so the conversation that we're going to have today is largely around taxes. And for you as an entrepreneur, you're thinking of setting up a company, what are some of the taxes that you're likely looking at? And what does that mean for your business going forward? So let's get straight into it, but first, here is our quote of the day. And our quote of the day says, the hardest thing in the world to understand is income tax. And that is by none other than Albert Einstein. And with that being said, Sammy, karibu sana to the program.
Thank you, Jimmy.
I must say, it's good to see you. Good to have you back here. And as usual, the first thing we want to understand is you're setting up a company. What are some of the taxes that you're looking at?
Depending on the kind of company you want to set up, as an entrepreneur, you need to know where the direction of your company would go. We have taxes that are inherent in the business formation. We have VAT, we have turnover tax, we have pay as you earn, we have corporate tax. These are the major trading taxes. We have exercise taxes for people trading in manufacturing, or if you want to venture into a water business, but that business that actually affect mass declaration of goods or services. So you need to know what kind of business first you're getting into. Then after that, the kind of taxes that will affect you directly and indirectly. We have corporate tax, which is mandatory. That one you cannot run away from it. We have turnover tax. So if you don't want corporate taxes, you opt for turnover tax. Turnover tax is paid as per your invoice. Corporate tax is paid at the end of the year. We have VAT, that is trading taxes, but VAT also has a cap. Only if you're trading beyond 5 million would you be liable to register for VAT. But you can do voluntary registration. So depending on what kind of business you want to start, the direction will demystify the kind of taxes that you will be exposed to.
But you get some, like, just from that statement, you mentioned about 3 different taxes. How then do we differentiate these different taxes and their implementation?
We have trading taxes, we have statutory taxes. Trading taxes, VAT, turnover tax. VAT, in its implementation, you will pay 16%. The rate changes depending on the mood of the economy. That one will pay by the 20th of every month. It is value added. It's only value you add on a service or a good, you'll pay VAT on it. VAT is remitted through KRA. At the end of the month, you can claim back. If you're trading on VAT, you can claim it back if you're giving an invoice that has VAT, where you go and purchase a good or a service that has VAT, you can claim it back. Pay as you earn is whereby you have employees. Employees who are employed in an organization or people you have contracted for a specific period of time, you pay as you earn. Pay as you earn is paid by the employee. You deduct it on behalf of KRA and give KRA and give the employee the difference. We have withholding taxes. Withholding taxes also depends on what kind of business. We have contractual withholding taxes, actually based on contracts. We have VAT withholding taxes. So it just depends on the nature of the transaction or organization you're setting up.
So let's talk about withholding tax for a minute here. And there's always this question of who is supposed to withhold this tax. Is it the company that I'm going into business with? Is it myself as a business owner? Who then acts for KRA?
The person who is paying you works on behalf of KRA to withhold that tax. If you are giving someone work, and that's you have to pay them some amount of money. Maybe it's a contract. We are withholding fees on contractual fees. It is you are liable to hold it on behalf of KRA and remit the same to KRA.
Okay.
Yes.
So that I make sure our listeners and our viewers understand this, I want you to give me an example in terms of you and I are going into business, right? Yeah. And I'm supposed to give you, let's say, 10 million.
Yes.
Right? Out of this 10 million, I'm supposed to deduct the tax that is payable, right? At what point then, or what metrics do I use to say out of this 10 million, this is the percentage or the amount I'm going to deduct from this to be able to pay tax?
So withholding taxes, they're inherent from the buyer and the seller.
Okay.
So if you are the buyer of the good, means you're paying out, or the buyer of the service means you're paying out.
Yeah.
At the point of payment, that is when you pay withholding taxes. You have received an invoice. At the moment you want to pay, you don't pay the full amount. Yeah. Withholding is dependent on the nature of the transaction. If it's a contract, you have 3% withholding on contractual fees. That is what you withhold. You give the person 97%.
Okay.
Yeah. Management and professional fees. If it's a resident, you withhold 5%. You give them only 95%. So at that point of payment, that is when you withhold and remit to carry on their behalf. That withholding in itself is not final tax.
Yeah.
To them, it acts like an advance tax. For example, if I'm to pay you 100%, I've paid you 95. I've withheld 5. I've remitted 5 to carry. Yeah. That 5 goes in as an advance tax for you. If at the end of the year you do your taxes and you're supposed to pay 10%, you deduct the 5 that I deducted you before.
Okay.
Yes, that's how withholding acts.
All right. Now we've seen a lot of young entrepreneurs going into this cosmetic space, and there is something that has been a bone of contention over the last couple of months, and that is the issue of sin tax.
Yes.
So can you just explain to our listeners what is sin tax? At what point is it remitted, and what are the calculations or what informs these taxes?
Sin tax is a quote people are using to demystify the kind of services that are illicit services to the society.
Yeah.
Like taxes on beer, taxes on cigarettes. That's sin tax. It's viewed by the community like this is a sin, so that's why it's called a sin tax.
Yeah.
See, there are different levels of sin taxes. We have exercise duties that actually have been leveraged by in a high space. In these cosmetic companies, most of the people engage maybe in digital era. We have the digital tax that affects segregated a couple of businesses. But I think what maybe we look at is the people who have come up with briefcase companies. They're either employed somewhere or they are working for another organization and they have a part-time business.
Yeah.
So this kind of part-time business, they're not taxed differently from any other corporate business. So the fact that you're opening a part-time business, you need to know that it is going to be taxed as the same as any other corporate outside here. Okay. So the taxes that are going to affect you will still be demystified by the kind of service you offer. For example, if you're selling perfumes, if you're selling cosmetics, there is VAT. VAT is remittable. We have corporate taxes at the end of the year. Yeah. So you need to be exposed to that. If you're entering into a business, there are things that you will need to do. In terms of taxes, by the end of the year, you need to be audited by a certified auditor. Then you file your taxes and pay your taxes. Yeah. If you engage in TOT, I'd advise many people engaging in briefcase companies to have turnover taxes. It is the most simple taxes and does not have baggage. Okay. Yeah, because at the end of the year, you'll not be eligible to file corporate tax at the end of the year. It's a one-off tax. It's final tax in its own. Yeah. So people are opening briefcase companies, as much as they might want to hide or not disclose their incomes, I'd advise them to register for turnover taxes, which are actually taxes and it's final on its 1% of your invoicing.
Okay, and then here comes a question on at what point then, let's say I have a briefcase company like you've called it, at what point then do I start paying taxes?
Immediately. If it's corporate tax, is immediately. If it's VAT, you analyze your revenues. If you feel that within a period you will be able to rise above 5 million, you know tax is low. There's an act that permits KRA to levy penalties and interest. Yeah. So it's low, it's purely low. The only thing that people are challenging is how the law is applied. Because we have loopholes in the not really loopholes, it's an open space. It is what you claim and what you defend that saves you in a tax court.
Yeah.
Those people who are in court right now fighting huge bills, you'll find most of these huge bills are penalties and interest. One available resolution that carrier has is ADR, Alternative Dispute Resolution.
Yes.
I would advise many of these, whether it's a corporate or an individual, enter into such an agreement with KRA. Solve it out of court. Because out of court, it is easier for you to negotiate for the penalties and interest waiver and pay the principal taxes.
All right. Yeah. And again, there's always the issue of why then don't you allow me to just pay the penalties? Why do I still have to pay the penalties and pay the interest?
Like I said before, it's a matter of law. It's enshrined in the Tax Act. Yeah, and actually it's approved by the Parliament of the day. So it's actually law that when you default, you have a penalty immediately. Yeah. If it's a principal tax, you have interest that has accumulated for you not paying the tax on time. However, with the mechanism that we have at KRA, that KRA has at the moment, is those penalties and interest, depending on how you argue them out, you can either be waived, or they can either be waived in 100% in totality, or they'll give you a principal margin on which they will waiver. However, if you enter into an ADR kind of resolution, the dispute resolution, you might be able to give a repayment plan. A repayment plan that actually will be in tandem or will be likely with your cash flows. So that at the end of the day, as much as you're paying unpaid taxes, you can still have financial float.
All right, let's try and move this conversation along and separate now myself as an entrepreneur and my individual taxes. Let's say I have a small business that I've been running on the side, but at the same time, I'm employed by company XYZ. What is the relation between the amount of taxes that I'm paying as an individual and the amount of taxes that I'm paying as an entrepreneur or an institution? So
the amount of taxes you pay as an individual are only in two phases. You should pay as you want or withholding taxes on your expert advice. Those taxes that you pay by a corporate or maybe your entity, you have VAT, that if you're exposed to VAT, if you're exposed to excess duty, if you're exposed to withholding taxes, if you, as an employee of another organization, have employees of your own, you'll also pay as you want for them, just as you paid by your company. The separation would be this, that one, in terms of disclosure, when you go to the ITR for carrier, there's a place you will disclose other incomes apart from employment incomes. So if you have not registered a business and you're getting incomes that are outside the scope of your employment, you'll be able to disclose through that mechanism.
But Sammy, isn't that double taxation?
Because it will not be double taxation. You see, the Act permits you. That is why it's advantageous. If you're running as a household and you have to disclose these revenues for taxation purposes, then form an entity. An independent entity that is independent of you and your employment. So that at the end of the period, you'll file two taxes. You'll file tax as an individual, which is pay as you want, that is this disclosure. And you'll also file taxes as a limited company or as an entity. The advantage is this entity, in terms of taxes, will not be seen as you. It will be a separate individual, so it will file taxes on its own. However, it's your company.
There has always been this concern of, are you as the owner of this company or this business liable for any taxes that have been defaulted?
Yes. If you are the only director. If you have an entrepreneur, you're an entrepreneur, and you're running an entrepreneurship company or a limited company or a business name, and you default in taxes as the director of this company, you'll be personally liable for taxes omitted or unpaid to the revenue authorities. That veil has been lifted. If you are a single director of a company, and you trade with other people in terms of loans, in terms of getting facilities, you will be liable for those loans as if you are the company itself. Yes.
There is the issue of, I need to be able to make sure that the taxes that I'm paying or the tax regime that, let's say, policymakers are coming up with also enables businesses to thrive. In Kenya, for instance, at the moment, the biggest concern that a lot of entrepreneurs have had is they're saying the tax regime is not allowing businesses to thrive. Is that the same feeling that you have, or what are some of the players in this industry saying?
It's true that the tax regime we are currently under, it is unlikely. It does not give space for business to grow. Because we have direct taxes and we have indirect taxes.
Yeah.
So if you are a business and you have competition in the market, so if you have direct taxes like pay as you earn, like corporate tax, and direct taxes like VAT, VAT has a threshold. Yeah, there are people in the market who are not registered for VAT yet, right? Because they have not reached the 5 million mandatory mark. But you as a business, you're registered for VAT. You're in the competitive space. The person who was not registered for VAT, there's a high likelihood that their pricing might be so low compared to yours.
Okay.
So by the time you and that person you have a comparison, you will lose as a business. But you see, at the end of the day, carriers demanding taxes from you.
Yeah.
So that is one end. Other end is the manufacturing side. Like oil has gone up like right now. The manufacturing goods will go up. It will be so hard for a manufacturer to offer a good that they have manufactured locally at a lower price compared to someone who is importing the same good. So in terms of business growth, you see, career has hampered that growth. Because if you charge me VAT, I pay excess duty, I need to pay my employees, I need to pay my corporate taxes. It means that my pricing has to be high. So that gives me a competitive disadvantage with the people of the same product in the same market.
So, and I know you are a big player in this sector. So, from some of the clients that you interact with, Sammy, do they feel that there needs to be a change in terms of the kind of tax regime that we have to ensure that businesses thrive?
Yes, 90% of my clients who are actually actively involved in business, they have the opinion that taxes need to be readjusted so that we can have tax advantages that are inherent in the Constitution or in the Tax Act itself that gives advantage to SMEs. People have been crying out for a tax holiday, what is given in Rwanda and such kind of countries. People are asking for tax advantages to lower their VAT. But you see, even when you look at it, most of these taxes are not formed by this regime. They are formed by people we borrow from. Like the IMF. The IMF sets taxes for many countries. If you go borrow to the IMF, you have to prove that, one, you'll be able to raise the extra amount you're asking for. So they will advise that the only way you raise taxes is through, you pay the debt is through raising tax rates. So as much as we might want to gamble it and come out of it, I think the state's hands are tied because they have to borrow more. They have to increase taxes more so that they can prove that what they're borrowing they can be paid. I think the only advantage this economy could do is kill corruption. You kill corruption, you get extra funds, and ensure that the money that is being borrowed goes to projects that actually bring in more fruit in a quickly way. Concessional loans, people are talking about concessional loans everywhere. So if you get a concessional loan or an infrastructure project, a project that you believe in 4 years will start having returns. If the government focuses on this kind of projects, so by the time this infrastructure starts paying off to the economy, you cannot be able to pay your loan. All
right, Sammy, final question now. We've seen what COVID has done to a lot of people. People have lost jobs, employment the employment sector has been bleeding in terms of the workforce. A good number of them are trying to get into business. So with the current tax regime and all these external factors, is this a good time to try your hand in business, or do you need to wait until maybe there's a change in the tax regime in the country?
I think business, out of the years we've had in consultancy and practice, business does not have a good time. It just involves you as a business owner. What is your plan? Are you emotionally engaged in your business? Are you feeling an emotional influx when you think about your business? Because that is one mistake which most young investors do. You're investing with emotions. You do not have facts. Because your friend in maybe say Kilimani has opened a bar shop and is earning good revenue from the bar, you want also to open a bar and earn more revenues. So it depends with how and the perspective of which you're opening your business with. Because as we speak now, even people want to open businesses now. We're advising them, you need to watch the market because the recession is coming.
Yeah.
There's a hard recession that is coming. It has started in the West. We might not feel it now because we have stock. Most these third world countries we buy stock. Yeah. So we have stock. The moment this stock starts depleting, we're going to enter into a serious recession. It's happening. So anybody who wants to open a business with this period, you need to do your research well. Okay. Because as much as there is recession, there are businesses which are thriving.
Yes. All right, Sammy, I think that is a good place to end it. Thank you so much for coming through, for being part of the show today. We will make sure to have you on again to be able to speak on some of these issues, and if possible to have also a guest who, let's say, is an entrepreneur, and they will tell us some of the problems that they've been facing when it comes to tax. Yeah. And that's all the time we have today right here on the Business Hour podcast. And like we always say, every hour is business hour.